Good evening, my friend. Today we will analyze another company that is paying monthly dividend payments, and this company is called Gladstone Investment Corporation with the stock ticker GAIN. And the reason why we will analyze this company are of course the monthly dividends, but otherwise also if we take a look at the 10-year graph, it's quite interesting because if we would buy this company, let's say in March 2014 and then sell it right now 10 years later in March 2024, altogether we would have a profit of 74%. But if we would basically dollar cost average this company, then altogether we would have around 6%. And as always, we will copy the data from this website called Macro Trends into my Excel table that I prepared right now here. And we will analyze the most important financial statements, meaning income statement, balance sheet, and cash flow statement. And we will analyze the data for the last 10 years, and we will analyze basically the most important bullet points from all those three financial statements, because this will give us a better perspective of the company. We could have more insight into the management, how the company is making business, how they develop through the years, and so on and so on. Basically, for the evaluation, it's always better to have the last 10 years. And also, when we will evaluate, we will try to be as harsh as possible when we evaluate the company. And then we will always decide, for example, whether we should buy or sell the stock, okay? And with that being said, now let's come to the evaluation. Total revenue and gross profit seem quite nice. And also gross profit margin, as you can see on the screen, is always more than 40%, which is absolutely amazing because we always want to be gross margin higher than 40. If we take a look at now the operating income and net income, they are absolutely inconsistent and therefore also quite bad, to be honest, because we don't know exactly what happened in, for example, with operating income in 2019. And also here with the net income in 2014 and 20, it was a loss, so I don't know, it's just not that good, okay? And then when we come to balance sheet, for example, the good thing is that the total equity is growing through the all years, but also then we have again so many bad bullet points. For example, the return on equity should be through the all 10 years higher than 10%. And here you can see that 1 year is -1 and then -2 and then 15, 17, 20 and so on and so on. It's just so inconsistent that we actually don't know what is happening, And also debt to equity ratio should always be lower than 50% or at least lower than 60%. And as you can see in the data, it was right now beginning quite well, with 50%, and then it was growing and then falling a bit and growing and growing. And right now it's around 74%, which is not that bad, but still not preferable, And we just don't know why they had so much debt and then why not. And it's again completely inconsistent, okay? And now we come to the cash flow statement, and in the cash flow statement, the good thing is that they are paying monthly dividends, which are also always increasing. Especially in the last year, they increased it massively, as you can see on the graph. And also when we see the P/E ratio, especially in comparison with the last 8 competitors, we can see that the average of their P/E was around 8, which is half of the preferable value, which is 15, and the P/E ratio from this company is just a bit less than 7, which is also lower than 15, so this is an amazing sign. And also the intrinsic value, that basically means what would be the fair price of this stock in comparison, for example, with cash flow, the expected growth, the dividend payments and so on. And the intrinsic value, basically the fair value up until when we can buy this stock, is 17, and the current price is a bit less than 14 at the moment of recording this video. And you can see that it's way below the 17, which is also amazing. And my final decision, bro, is that you should not buy this stock because the financials seem to be a bit inconsistent and chaotic, despite the potential undervalued price. And the reason why we should not buy this company at the moment is because we actually, as dividend investors, we want to invest only in companies that bring consistent returns over the years. And as you can see in the income statement, gross profit and the total revenue are the only, so to say, bullet points that seem consistent. Everything else is completely chaotic. This is probably one of the most inconsistent companies that I've analyzed so far, so I really don't know what is happening. But based on financials, bro, I think that we should not buy this stock at the moment. And with that being said, bro, do the hard work and see you on top of the world.